Okay, let's answer some proprietary fund questions that are listed under fund financial statements. Okay. So the first question is question 16. It says Gary Township's Water and Sewer Fund transferred funds to subsidize the ongoing operations of Township's general fund. What category would Gary use to classify cash disbursements for this purpose on its Water and Sewer Enterprise Fund statement of cash flows? So, when evaluating this question, we need to see where the funds are going and if they're part of the primary operations, they're being invested, if they're related to different capital expenditures for the fund, that sort of thing. And so since we're transferring funds to the general fund, it does not qualify as the primary operations of the water and sewer fund. We're not investing those funds in anything. It's not related to any financing or capital activities, and so therefore it would default to non-capital financing activities. So the answer to number 16 is D. Number 17, Foster Township levies property taxes to subsidize the ongoing operations of its water and sewer fund. What category would Foster use to classify cash receipts from property taxes on its water and sewer enterprise fund statement of cash flows? So the same logic applies to this question. So we're levying property taxes to subsidize our water and sewer fund. These funds from the property taxes would not come from operating activities because they do not deal primarily with our water treatment and our sewer function for that part of the government. So we're not generating these funds from our operations. It's not related to any capital or any other financing activities. And we're also not investing these funds anywhere or receiving them from an investment. And so the answer here again is non-capital financing activities is where it would be classified on the statement of cash flows. Okay, question 18. Exeter Township was awarded an operating grant meant to subsidize the ongoing operations of its water and sewer fund. What category would Exeter use to classify cash receipts from this grant on its water and sewer enterprise fund statement of cash flows? And so again, using the same logic, this grant would not come from the operations of the water and sewer activities. It would not be classified as capital or related financing activities. The money was not invested, so we're not receiving any funds from our investing activities, and so therefore it would be another non-capital financing activity, so A. Okay, Durban Township's water and sewer fund had $40,000 in operating income and a total change in net assets of $150,000. The water and sewer fund also had the following transactions either derived from a comparison of current and prior year statements of net assets or displayed on the current year statement of activities. And so we have these amounts listed here, and then cash flows from operating activities would reconcile to what amount. And so first we need to start with operating income, and that for the year was $40,000. And then next we need to reconcile this. And so to do that, we would add in the depreciation expense for the year. And then we would want to recognize any change in the current liabilities. And so we would add in the current portion of bonded indebtedness of $25,000. Or I'm sorry, we would add in the increase in current liabilities less the $25,000 from the current portion of bonded indebtedness, which would be $25,000. And then we would subtract out any increases in inventory or current assets other than cash, which is $30,000. Which would bring us to $105,000. Which is D. Okay, and then the last question we have here is a similar question. Cabot Township's Water and Sewer Fund had $40,000 in operating income and a total change in net position of $150,000. The Water and Sewer Fund also had the following transactions, either derived from comparison of current and prior year statements of net position or displayed on the current year statement of activities. There's the listed amounts. Cash flows from operating activities would reconcile to what amount? So again, we would start with the operating income, which was $40,000. And then we would add in any depreciation expense for the year, which in this case was $70,000 again. And then we would subtract out any current assets or inventory. And then we want to add in the change in current liabilities, the increase in current liabilities, less the current portion of revolving debt. So the $50,000 minus the $15,000 gives us $35,000, which we would add in. Which gives us $115,000, which is C in this case. All right, that should take care of these questions.